earnings season is in full swing. Google parent company Alphabet and Microsoft both reporting earnings after the bell yesterday. Alphabet reporting a miss on both earnings and revenue in the quarter, seeing particular weakness from YouTube. But it was a bit of a different picture for Microsoft, the tech giant posting better than expected third quarter results with solid revenue guidance going into its fourth quarter. But earnings season is far from over. Next up on the docket, we've got Facebook's parent company, Meta, of course, which is set to report earnings after the bell today. Joining us now to discuss some of these biggest reports that we've seen so far and the ones to come is a friend of the show, Thomas Hayes, chairman of Great Hill Capital. Thomas, let's start off with Alphabet. What were some of your biggest takeaways from the tech giant's report there?
Yeah, well, Alicia, thanks for having me back. It was a tale of two cities between Alphabet and Microsoft. Microsoft beat on top and bottom line and had strong guidance. Alphabet, on the other hand, missed on the top line, bottom line, and offered weak guidance. But I don't think it's as bad as people are saying, and I'm going to tell you why. First off, we have to put this in perspective. We had a huge Omicron wave in Q1, number one. People forget about that. We have short-term memories. And number two, we had a war between Russia and Ukraine, which is still ongoing, and that impacted YouTube, which we'll talk about. But, let's put this in perspective. The revenues were up 23% year on year. Yes, it was the lowest growth rate since 2020, where you had a lot of pull forward with the pandemic, but operating income was up 30%. And if you look at the different groups, Google Services, which is their bread and butter, the advertising was up 20.1%. Google Cloud was up 43.82%. That's the future. That's very promising. And Other Bets, the small division, it was up 122%. So when you break down their bread and butter, Alicia, the Google Services, the search was really lifted by travel. Huge amounts of travel search. As a matter of fact, their search was higher than Q1 of 2019 before the pandemic for travel, which is really, really exciting. That was up 24.28%. Now, YouTube ads, this is the controversial part. They missed by $600 million. So they were expected to do 7.5 billion. They did 6.9. Ruth Porat said that was attributable largely to the war in Russia, between Russia and Ukraine, because it dramatically impacted advertising in Europe and particularly in Eastern Europe. That remains to be seen. We'll find out if that's accurate moving forward. But her guidance was somewhat weak, and that kind of threw the street for a loop. And that's why you're seeing the stock down a little bit, despite really strong results, generally speaking.
I certainly will give, obviously, tough comparables. I'll give the geopolitical situation and the impact, when it comes to the situation between Russia and Ukraine. And to your point, there were some positive indicators on the bread and butter side of things when it comes to, Google Cloud and other services there. But the reality is there seems to be some of a pullback more broadly, even beyond just Google, with just advertising dollars. And is there any concern about what that signals in terms of the consumer right now and consumer spending? Because that is a leading indicator that we look at a macro level. And it's beyond just Google being the latest company to show some signs that the consumer is at least getting picky. And then what happens after the consumer gets picky? They pull back.
Yeah, well, it's crosswinds, Alicia. I mean, if you looked at Visa earnings this morning, the consumer is stronger than ever. They were spending a ton on travel. So I think as it relates to Google, I think you got to give them the benefit of the doubt. I think Ruth is trying to be conservative because she can't predict the outcome of the war and the impact on their ad sales in Europe. But generally, look, here's all you need to know about Google. They're going to buy back $70 billion of stock. And if you had any doubts about who's going to be in the market in the next few days with the stock down 3-4%, it's going to be Ruth Porat. So I wouldn't bet against her. I wouldn't bet against the company. They're going to continue to grow. And if you get some alleviation in Europe, we could see that YouTube revenue kick right back up and everything else kick into full gear.
I will say I am with you in that I wouldn't bet against Google by any means. But, I do think there are some underlying things that are worth kind of digging into a little bit more, especially even this, right? Google posting a beat for its cloud unit. You mentioned that, growing 44% in the quarter. But the reality is Alphabet notes that segment is still losing money. When it comes to Google's cloud segment, what do you think kind of lies ahead? And how could they curb even bigger losses going forward amid the environment that we're in right now?
Yeah, well, I think as you look at the bottom line, of the general business. The accounting factors were linked to some certain investments. As far as the cloud, there's a huge amount of investment that goes into that until you gain scale. So they're a little bit late to the party with the cloud, but the growth rate, it shows that they are going to be a major player. They're not going to be of the likes of AWS or Azure, but with those growth rates, there's a very promising future. And that is a very, very high margin business. As we know, it financed much of Amazon's growth over the last decade. So we definitely want to keep an open mind to their cloud business and just acknowledge that they're losing money on that segment just because it's relatively nascent business. They're a little bit late mover, but as they get scale, that's going to just throw off tons of cash to the bottom line. And that's one of the reasons that we think this is a relatively reasonable valuation here.
Going from Google to Microsoft, because that was a pretty impressive report, right? It saw revenue jump 18% since last year. What were some of the biggest high points in that report for you?
Yeah, no question. As you said, the revenue jumped, operating income up 19%, and net income up 8%. So that's good. But the cloud is the name of the game here. The cloud revenue was $23.4 billion, up 32%. And if you look at the three different business divisions, productivity and business processes was up 17%. That was in line with expectations. The highlights there were Office 365 up 17%. And then the consumer, Microsoft 365, grew subscribers. They're now at 58.4 million. And LinkedIn revenue was up 34%. So that is growing.
Yeah.
Now, the second group, Intelligent Cloud, that beat expectations. That was up 26%, came in at 19.1 versus 18.9 billion of revenue. And the big highlight there was Azure. Their cloud business was up 46%. And then the final division was the more personal computing. That beat expectations at 14.5 billion of revenue versus 14.3, up 11%. That's Windows OEM. And Xbox was up 4% year on year. So a little bit soft there, but they did return 12.4 billion to shareholders through buybacks, through dividends, and that's up 25% year on year.
Thomas, I'm coming short on time. I've only got like 30 seconds here, but I want to ask this question because Microsoft released figures from its cybersecurity business for the first time ever, and that segment brought in a whopping $10 billion in annual revenue. Do you think we could see Microsoft make an acquisition in this space and grow it even further?
Well, I think they're going to continue to make more and more acquisitions. You saw the Mandiant deal. That's a former FireEye. And I think that that's going to be a huge source of growth for them moving forward. We're seeing it with some of the other providers. And the other key takeaway with Microsoft, Alicia, is that software spending is still strong. So we're going to be able to look through to some of the other software companies that have been hit very, very hard. And as we look at that enterprise software spend, I think it's going to actually be much better than expected because expectations are so low coming into this quarter's earnings. And I think we're going to be pleasantly surprised in coming weeks.
We didn't even get to touch on Meta or Amazon, but of course we'll get the results from Meta after the bell today and then Amazon tomorrow. As always, Thomas, really appreciate your time and your insight. Thomas Hayes, chairman of Great Hill Capital.